Hello and welcome to the real estate market analysis for San Jose, California for the month of June of 2023. This is an opportunity for us to sort of sit back, take a look at the numbers, see where we are today, compare it to a year ago, and also look back over our shoulder over past months to see what the trend has been over time. And hopefully with that information, we might be able to estimate where we're going to be going as we head further into 2023. So let's go ahead and jump in and take a look at the numbers. And we're going to start with active listings. That's the total number of homes that are available on the market in San Jose, California. And just to sort of orient you to the chart you're looking at, you can see that we've got it going all the way back to March of 2022 to June of 2023. And then all the way over to the right, I have June of 2022 repeated so that you can see the year-over-year change side by side, just to make it easier for you to visually see the difference between those two time periods. Now, as you can see, in June of 2023 versus June of 2022, big difference. We had a 54% decline in the total number of active listings. Now, to calibrate you to what's happening and sort of get an idea of where we were a year ago in June, keep in mind that this is now well into the ramp up of interest rates. The increase in interest rates started in March and carried on right on through to the end of last year. So right around here, we're still seeing very escalated interest rates. I believe at this point we were seeing interest rates around 6%, and we peaked out at 7% in a couple of months after this. So just keep in mind that's what's happening. So, and those kinds of realities in the marketplace not only going to affect what buyers are thinking, it's also going to assume what affect what sellers are thinking. Primarily because if you're a seller, you're probably also going to be a buyer, because if you're selling your home, you're buying your home. And if you're someone who has a 2.8% loan on your home, or you're someone who is looking to buy another home, even if you have an interest rate that's even higher than that at 3% or 4%, the idea of then having to go and purchase a home at current interest rates can be very daunting. And the only folks who really don't fall into that category are those who would be looking to move completely out of the area where the proceeds from their home would allow them to purchase their new home with all cash and they wouldn't have to finance. So keeping those things in mind, let's move ahead and take a look at what we saw here in San Jose in June. So as I said, 509 homes total on the market in June of 2023, which is a ridiculously low number if you know the history going back years in San Jose. And it's been relatively flat since December. Now, we saw the peak in July of last year. So when we compare next month to the previous year, that would be the peak of inventory. That would be the highest inventory that we've seen. And we're going to be nowhere near that in my estimation. So this is definitely something where I think we're going to see very suppressed inventory moving forward. Not sure what's going to change that. We didn't see a lot of sellers jumping into the market deciding to profit take. We didn't see a lot of sellers coming onto the market who fell into that secondary category that I was mentioning a moment ago of folks who were looking to move and then potentially use their proceeds to purchase their homes entirely. One reality there that's interesting is that what I have found with people I have been talking to in terms of a ground truth, and I'm not just talking about Morgan Hill or Gilroy folks I've been talking to, but San Jose people I've been talking to who are potentially exploring the idea of selling their home, they owe quite a bit more than the press would seem to indicate. So many folks indicate that, current homeowners have this huge pile of equity. And what I'm seeing is not a ton of equity. A lot of folks took profit out by refinancing when interest rates were super low. And they've definitely have that low interest rate. They've definitely got that 2.8, 3.2, 3.5 interest rate, but they refinanced and pulled out more cash. So if they were to sell their home now, they actually wouldn't have enough to full out purchase the next home. So that's been a dynamic that I've been seeing that I think partially explains why we haven't seen these numbers growing. The months of inventory right now is less than a month. So if suddenly demand were to increase, we would instantly be pushed into an even more seller-focused market. But right now, the key data point is inventory. If inventory were to increase, this would change. But we have such low inventory right now that even though buyer demand has also decreased, inventory has dropped by so much more that it's sort of compensated it. And we're going to see how that kind of affects the numbers as we move forward. Now, next, let's go ahead and take a look at new listings. These are the total number of homeowners who decided to become home sellers in June of 2023. So if we take a look at it, we can see this number is down 29% from the same time last year. In June of 2023, we had 645 homes added to the market in San Jose. In June of 2022, San Jose had 914 homes added in June. And we can see the trend here. is just dramatic. So starting in March, in terms of new listings, and remember, March is when interest rates started their increase, just a steady drop right until we hit December. And that would be expected. December is typically one of the lowest months for new listings because no one really wants to list their home in the holidays and also in the winter. So totally natural to have that kind of a drop. But what we didn't see is the dramatic increases that we normally see at the beginning of the new year. So usually that first quarter, January, February, March, tends to see a big jump in the total number of inventory, total number of homes added to inventory. And we just didn't see that. We saw an increase, but nothing on par with what we've seen in the past. And we also saw the trend leading up into March, April, May, continuing to increase, with it really flattening between March and June. So we haven't seen a whole lot of increase in the total of number of new listings, which obviously feeds into the inventory numbers, which we've already looked at. But with 914 homes listed last year and 645 listed this year, the number of sellers obviously who are looking to jump into this marketplace has dramatically decreased. Where do I expect to see this going? Well, it's hard to use last year as an indicator, but under normal circumstances, if we take just past decades of San Jose data and we look at it, this tends to be a number that from here declines throughout the rest of the year. So we'll see how that plays out. It wouldn't surprise me if we see things remain relatively flat and then start to really see a noticeable decrease in the number of new homes listed in July, August, and September as we exit the summer months and start heading into the winter months when activity tends to drop just because it's winter, regardless of any other influences in the market. Next, let's take a look at total number of homes sold. Again, numbers are lower compared to the same time last year. In June of 2023, we saw 556 homes sold. Last year, it was 670. So not as big as a drop as some other numbers we've covered so far, but 17% off from the same time last year. And if we look at June of last year, we can see that the total number of homes sold peaked a couple of months before June, so peaked in April. April and May tend to be the months that compete with one another as being the peak for these kinds of numbers in terms of overall activity, homes getting sold, that sort of thing. But it's also important to remember that the number of homes sold is a little bit of a lagging indicator because it indicates an offer that was accepted at least in most cases 30 to 45 days before the month it closed. So that indicates that in March of last year, we had a huge number of pending sales that then fed into the closed escrows that we saw in April, where the home officially sold, money changed hands, and the actual title of the home went to the new buyer. Last year, we saw a steady decrease right through to July in terms of total number of homes sold, with a bit of a boost in August and September. And then from there, a decline that went right all the way through to January of 2023. I would expect to see the same trends this year. I would expect to see the total number of homes sold dropping between June and July, just like last year. And I'm not sure we would even see as much of an uptick as we saw in August and September of last year, simply because we're not seeing any indicators that that's going to happen. Now, if something dramatic happens with interest rates, obviously that would be a market-changing event that would influence just all the numbers from top to bottom. But right now, if I'm going to give you an estimate of what we're going to see until the end of this year, I'm estimating it probably more flat performance in terms of number of homes sold, with declines from here, flat or maybe a little bit of an increase, but then declines from, say, September, October, right through to the end of the year into January of 2024. Total number of pending sales. Now, these are homes that accepted an offer. So you were looking at the house, you made an offer, the seller accepted it, and the status of the listing changed to pending or contingent. That's what this represents. What's interesting is not as much of a drop-off this year as last year. We had 490 homes go pending in June of 2023, 508 last year. So not a huge drop, which indicates we likely have a pretty stable July in terms of total number of homes sold. If we look at June last year and July last year, they're very close. 508 again in June of 2022, but in July it was 512 in terms of pending. And again, this is a leading indicator. It feeds into what we were likely to see. And remember, it's a decline from May. So my guess is it will be relatively flat or lower than last month's number. And if we take a look at the bar graph, or the chart below that, comparing this to solds, the reason I do that is it's to anticipate what we'll see in terms of sold numbers. So if you look at May, you can see we had pending and solds almost equal, but then we ended up seeing a little bit of an uptick because pending last month was actually just a little bit higher than what sold in June. You account for that through homes that fell out of escrow or homes that are taking longer to close than just that 30-day window. So we saw an increase in the total number of homes sold between May and June. Or, excuse me, not an increase, but when comparing it to the pending number of homes, pendings declined, which would lead us to indicate that compared to this month, we would see a decline in total number of homes sold. Of course, some of those homes that went pending in May that didn't end up closing in June may close in July, so it may soften that number a little bit, but we would expect to see a decline in the total number of homes sold based on the numbers we're seeing here. Now, original list price. I like to use original list price. I don't know anyone else who does, but I like to use it because it's an opportunity for us to sort of get a peek into the mindset of home sellers. You are a homeowner, you become a home seller, and you do that by signing a listing agreement with a real estate agent. And the number you pick to list your home for is what this number is. So it doesn't represent any price reductions or increases that take place after the listing. But the day that homeowner signed the listing agreement and they wrote down an amount that they were going to market the home at, that's what this number is. Does that make sense? So this is what expectations are. It's an expectations number. What did sellers think they were going to get or expect to get today for their home? Now in San Jose, we saw that in June of 2023, that number was $1,418,942, which is only 9.9%, so not even a full percentage point lower than last year, where it was $1,431,587. Now, why is this interesting? Because it shows that there was not an escalated level of expectation on the part of sellers. Sellers were expecting to get about what they got last year, which is an interesting change to see. Now, it's something we've seen as a trend over the last few months in a variety of communities, but we've also seen a few months back where expectations were much higher, right? Sellers were expecting to get 10% more, 11% more. In some communities, sellers were expecting to get nearly 20% more than they did the year before. And that's had a very profound impact on these numbers in terms of price reductions, those types of things. So we'll see how this plays out. I think this is a good change. And as we'll see with some future some numbers we're going to cover here in a second, it makes sense. And you can see here also, this number's been relatively flat, right? We've seen a little bit of variation, but we've really been in the 1.4 million range since December. We had a little bit of a drop in January, and that makes sense, right? Remember, the original list price would be a little lower than, it's interesting that original list price is lower because remember, this isn't sales price, but it's interesting that in January, we saw homes getting listed for slightly lower. My estimation on that was that there was a push to recognize the new reality in terms of markets in San Jose. We did also have homes in January selling for over asking price. So it may have been the psychology of heading into a new market. You want to take advantage of the fact that we're about to hit the peak markets, which tends to be, April and May. So folks, I think we're going on the market with this idea to price aggressively to get attention and then count on the market to sort of drag those sales values up, which we did see happen. What do I expect things to do moving forward? I expect to continue to see what we're seeing here, relatively flat performance in San Jose for the rest of 2023. Now, these are the average sales prices. So these aren't expectations. These are what the homes actually sold for. And what's interesting is, compared to the same time last year, sellers on average are getting 1.7% more than they did last year. Last year in June of 2022, the average home sales price was $1,469,903. In June of 2023, that number was $1,494,935. So definitely a uptick. This number has been kind of steadily upticking since January, February. And it's a reflection, I think, of what's been happening in the market with this ridiculously low inventory. Now, while there is very low demand, as I mentioned before, inventory has outpaced it in terms of being short of demand. So we've continued to see these numbers. And there's some other numbers that reflect how much above asking price that we have seen folks being willing to pay. And in many of the communities in Santa Clara County, San Jose, Morgan Hill, Gilroy, the ones that I tend to focus on, we have continued to see above 100%. So that indicates multiple offers for many of these properties. What do I expect to see here as we move forward? Well, if we look at last year, we see April is when we had a peak in average sales price. April was not the peak for us. In fact, June ended up being the peak this year. Not entirely normal, but again, I think because of the unnaturally low amount of inventory, that's one reason why these numbers keep staying so high. But my guess, and this was my estimation last month, so we're going to have to take this one with a grain of salt, is that we will see average sales prices remaining flat or lower for the rest of the year. If we look at just normal seasonal influences, we should expect average sales prices to decline from here. But again, with inventory numbers so low and demand just a little higher than that, it may sustain higher prices for longer than usual. If we take a look at percent of list price, now what's interesting about this is an opportunity to peek inside the skulls of buyers, because this number represents how much above or below asking price did a buyer end up buying this home. And this is what the list price was at the time the offer was made. So this is not based off of original price. This is based off of list price. So for instance, the flow of events could be home gets listed for $1 million, home gets reduced in price by $100,000 down to $900,000. Buyer makes an offer. This math would be based on that $900,000 price, not the $1 million price that was originally the listing price. And the reason why I look at these numbers this way is, as I mentioned, it's a way to look into the psychology of buyers. When they were faced with this $900,000 list price, what was their instinct? What was their feeling in terms of what they should be willing to do in terms of an offer? Now, if you look at this, the numbers are nuts. They've been gradually going up since January of 2023. We saw below 100% from August almost all the way through January, with one exception in September. But if you'll notice, it's definitely a big number off from what it was way back in March, April, and May of 2022, when things were a little bit more robust. Interest rates were still just starting their rise, and we were starting to see folks not be offering as much above asking price as they were. So this year, in June of 2023, we were seeing the average home in San Jose going for 5.2% over asking price. Last year, it was going for 106.1 or 6.1% above asking price. That's only a 0.9% drop in terms of what amount over asking price buyers have been willing to pay. And we can see that for 2023, it's a peak. The peak last year, I believe, was February and March. This year, the peak has been June so far. And it's as we've progressed into the year, it has simply gone higher each and every month. Now, my estimation between May and June was that we were going to see this number flattening a little bit. That clearly didn't happen. It only went up a little bit, but still went up. So we're going to keep an eye on this one and see where it goes. But again, it's all about supply and demand. If you simply have more demand than you do supply, even when those numbers are dramatically reduced, this is what you're going to tend to see. There's simply too much competition. Now, remember, this is an on average number, and there are going to be some markets where folks are paying below asking price and some markets where folks are paying over asking price. And right now, that over asking price reality is dominating more than the homes that are selling for below asking price. And so much of this relies on where your home is located. There are still some neighborhoods, as there will always be true, that are always in demand regardless of what's happening in the marketplace. And those homes really, when they come on the market, those ones that tend to be the best example of that kind of home, not only does this happen where they sell for 5% plus over asking price, but they sell very quickly. So that's just been a reality as well. And we're going to see as we move forward relating to what those days on market numbers have been as well. Where do I expect this to go? Well, I expect it to go down a little bit between last month and this month. So my expectation is that it'll at least probably stay about the same. It'll probably be flat. But if we start to see more rational market things, I think I would hope that this would go down a little bit. But my guess is it will likely continue to see a little bit of an increase. Not dramatic numbers, not like we saw between March and April. Because again, as we are heading further into the year, we are getting into the less demand, the lower demand, the least hot part of the real estate market. So I would expect that to be reflected in these numbers. Unfortunately, though, I can't give you what I think is a super solid estimate on where this number is going to go. Total days on market, as promised, we had 16 days on the market in June of 2023 compared to 13 days last year. That's a 23% increase. But look at where we peaked out in January at 34 days. And it's been a pretty huge turnaround in terms of the drop in days on market. And again, this just indicates how demand compared to supply is really sort of lopsided right now. This really, really low inventory is what's feeding this beast. And I believe that this will sort of continue. Again, we didn't see much of an increase in the total number of homes listed. My guess is we're not going to see that number increasing. It really just depends on how long buyers are out there in this market looking to purchase. Because, as I said, there are homes that are not falling into this category. There's still plenty of homes out there that I look at and I see that are results of various searches that have been on the market for over 100 days. So just keep that in mind, that if you want to find out what's going on with your home specifically, best to get a market analysis that's specific to your home where your home is located. Where do I expect this number to go? I would expect it to, as you can see, it's been declining steadily all through 2023. I would expect it to probably go down for another month, perhaps 2 more, but then start to increase once we get into September and October as we enter into the winter months. Now, finally, let's go ahead and take a look at price reductions in June of 2023 for San Jose. This is the total number of homes that had a price reduction. And yes, that indicates that the homes just weren't selling because they were overpriced. There's still been a dynamic of homes that were originally listed too high that just weren't really in reality with the marketplace and were getting completely overlooked. And this number is actually up from the same time last month. So this isn't compared year over year is the bottom number, but we had a 20% total of homes on inventory that had their price reduced in June of 2023 in San Jose. In May, we had 19% of those homes, so it's a bit of an uptick in the number of homes that had price reductions. Year over year, this number is down 73%. And remember, we were already into that much more challenging time of the year when interest rates started to make their gigantic increase. So it makes sense that this number would be less than what it was a year ago, simply because the response to, I mean, we were seeing numbers of, 40, 50% of homes having price reductions simply because of the complete crash in demand based on interest rates. So in order to get sold, homes just had to start making those changes. But that's what we saw this time around for June. And I think that's an indicator of sort of the dynamic market that we've been talking about, relating to other numbers that indicate this crazy, everything's selling quick, selling for over asking price number, versus homeowners who need to adjust their price in order to be competitive in the marketplace. And this is actually a decent number compared to past months that indicates a little bit more sanity in terms of original pricing. And as we talked about with original list prices, we can see there that comparing it to the same time last year, home sellers have definitely been better calibrated to what the realities of the market are today and what the market will bear. Okay. Well, I hope that that's been useful for everyone. As always, the goal is to leave you with more knowledge than I take up in your time. If you'd like to learn more, maybe get a free value estimate of what your home is worth in today's marketplace, or start your search for the perfect home, head on over to soldbyrobert.com. I've got tools right there on the front page above the fold for you to either start that market analysis of your home or to start that home search, whichever path you need to follow. I am happy to help. Again, my name is Robert Whitelaw, licensed real estate broker right here in Silicon Valley, ready to help you make your real estate dreams a reality. Thanks again, and I look forward to talking to you next time.